A brief intro. There are people here who are meeting me for the first time, so I thought I'll just spend a minute on that. So I'm Prabha Srinivasan. I'm a founder, CEO of Ventura Pranas. It is a cross-border advisory and compliance firm specializing in US and India tax and compliance and advisory. And we are a 100-member team, and we're located between Chennai, Los Angeles, Trichy, and Bangalore. I'm dual certified, and that was the genesis of the firm, and we've grown since our formation in 2011. Considerations like documentation and reporting. So I've just parked some important documentation I think you should keep in mind if you're contemplating a transaction. Make sure you've got your Aadhaar, PAN, OCI. Your NRO bank account should be ready if you're a non-resident. You do need a lawyer or a very senior CA with real estate experience to deal with your property documents, the actual deal. Probated wills, if you have a will, that through which you've acquired an asset, that will should have been probated, if you're, so that's something to keep in mind. And let's say there is a will, could not be probated, it's too late in the game today to probate it for whatever reasons. I have an example of a family that relocated out of a small town in Andhra, and they can't even imagine going back to probate the will. Then you're going to have to get release deeds from everybody who could be an heir apparent, and to facilitate the transaction for you to sell. And don't wake up to this on the day of sale, right? You've got to start working your way towards it, or the day you decide to put it up on the market. And then stamp duty considerations. I had told you that you could consider transferring some assets. You can do it by way of a settlement deed. And then there are stamp duty considerations because these rates vary from state to state, and they vary whether or not that person, the transferee, is an Indian relative or non-relative. So it's too much in depth for me to go over those rates, so I'm just going to park that. Let's switch gears now and look at it from the US side. If you have a significant inheritance, any inheritance gift over $100,000, the US IRS says you have to report it. And if you don't report it, you don't get the benefit of the basis. If you report it late, you're looking at huge penalties of upwards of $10,000 per year that you fail to do it. So please, if you know you are a beneficiary to a large estate in India, you want to make sure you don't lose the opportunity to do some effective tax planning and don't fall afoul of reporting rules. And I did tell you that getting a fair market value on the date of death will allow you to reduce the cap gains. You want a real estate property valuer who will give you a good price, a fair price, and will stand by it if there is litigation in the US. If you're selling, in all likelihood, your proceeds in the bank are going to kick you up into the FBAR disclosures if you've not done it in the past, so make sure you take care of that. Form 8938 is also another FATCA disclosure. If you've got significant foreign financial assets, which your bank accounts will count for, your capital gains deposits will count for, right? All of these will throw you into that. Make sure you file that. And if this property was a rental activity that you're selling, you have to address the cap gains on the sale, and that's dealt with in the forms that I've just mentioned there. If you run into issues, this is how you get in touch with us. We've got our information up there. Everybody who's registered for this already has our contact information.